studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We are coming to you live as always from the CNBC-TV18 studios. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Morning, Nigel.
Morning.
It seems like the bulls are in complete control of this market. Of course, some big events lined up like the election results on Sunday, but give and take everything, this is an uptrending market and I guess everyone's ready for it.
Yeah, it's been a fantastic November, so to call it, and I think everyone's waiting by whether Santa's going to come to town in December itself, because that Santa Claus rally will really get these markets up and going.
I mean, actually, November has been quite fantastic for global markets, right? I mean, it's broken lots of records, and we'll put some of this data out a little later down in the day, but it's been a wild month, November. So let's just quickly tell you about today, right? I mean, and we'll pick up from where we left off yesterday. The Nifty broke out and it continued its breakout, which we saw day before yesterday, with strong momentum. For the Nifty, it was a strong rally, follow-on buying. I mean, you just look at the DII number, the institutional flows, which are starting to come back in full force. So what are we looking at? We're looking at new highs, which, I mean, 100 points away, so it's going to happen. It's a matter of time. Now, overnight, there's not very much by way of a decisive handoff from Wall Street, neither here nor there kind of a day. Nasdaq was down a little bit. It was a mixed session. Some data came through. Third quarter GDP, the second revision to it was upwards. So that's good news. But and of course, core PCE, which is the inflation number which the Fed looks at, that was revised lower. That was revised down by about 10 basis points, 2.4 went to about 2.3% or so. But the point is that, and this is essentially what we are talking about, the Goldilocks kind of scenario where growth continues to chug along nicely, inflation comes off and, you know, it hurts no one and everything is okay. But can it remain like that? At least for now, it seems to be the case. We had some commentary from Fed officials as well. So Bostic and Mester both came out and said that the current Fed policy is well positioned. I mean, the policy that is already underway, which is to say that maybe the last of the hikes is behind us. The last hike was the last one, and we are basically going to be on an extended hold. Now, the market, of course, is not saying that it's going to be an extended hold. Markets are positioning themselves for rate cuts. Some are saying in the first quarter of 2024, but for the whole of 2024, almost everyone expects rate cuts. Will that be the case? The 10-year, in response to the data, in response to comments, etc., lost about 5 basis points. So 2 days, the 10-year is down 10 basis points. We ended about 4.27. I mean, technically speaking, you're basically looking at about 4.05 kind of levels on the 10-year, which is, I mean, a far cry, which will be a far cry from the recent highs. Oil prices moved up a tad bit, about 1.5%. We are back at about $83 per barrel. OPEC Plus meeting today, lots of discussion, reports suggesting that they're trying to resolve what to do with the quotas. I mean, the earlier meeting did not happen. This is the delayed meeting which is taking place now, and we'll see if, output is cut. That's not the base case, but it's possible. In the near term, just to circle back to the levels here, the Nifty perhaps heads to the all-time high, which is 20,222. We left off at 21, almost 100 yesterday. And once you get a close above the 20,222 mark, I mean, the medium-term resistance stands at 20,700, in the very near term. Bank Nifty has given a bullish crossover yesterday. And, you know, we made the point yesterday when we started the closing that over the last 4 sessions, the Nifty Bank has added almost about 1,400 points. Last hour was very positive yesterday for the Nifty Bank as well. Resistance stands at 44,740, which is the 61.8% retracement. And then the 45,450 kind of levels, which is the 78% retracement of the entire fall before it can head to its own high, the Nifty Bank that is. On the way down, the support comes in at the 20-day, which stands at 43,695, almost 43,700 kind of levels. And of course, I mean, the big Q is the state election exit poll results, which we will get later in the evening. So in a way, you know, if it's going to be dramatic, tomorrow is kind of the semi-finals by way of market reaction. On Sunday, we get the actual results. And on Monday, we'll get the full sort of picture about politics, political economy, and the discussion which takes off from that. Sonia.
Oh, absolutely. You know, I think, as I said, the bulls are in complete control of this market. You can sense it with the internals as well, right? Yesterday, you saw the Bank Nifty breakout. So not just the IT stocks, which have been doing very well. We'll talk more about that later. But there is a breakout in the Bank Nifty as well. Now the Bank Nifty almost at that 45,000 level. A big move is what we saw yesterday. So that could be a leadership area for the market this morning too. Now, Prashant was talking about how domestic institutions have come back in a big way, but don't lose sight of what's happening with the FIIs as well. In the last 5 days, FIIs have been buying consistently, and they've bought over 5,300 crores in the cash markets in just 5 trading sessions. And if you remember, in the preceding few months, there was a little lackluster move from the FII. So FIIs have also come back in a big way in this market, and both, those communities have bought in the cash markets. There is some nervousness definitely ahead of the exit polls, but I'll be watching out for the IT space very closely. Remember, it is pretty much a Goldilocks scenario for the IT companies. Now, the US GDP numbers were very strong, higher than what the street was expecting. The US bond yields have cooled off. In fact, I think the bond yields ended below that 4.3% mark. So those two positive factors will ensure that the IT space continues to assume leadership. Pretty much something that you saw yesterday as well. So both IT and banks could fire and hence take the markets to new highs. Also, don't miss out on the new listing today. There are 4 actually, but Tata Tech is the big listing that we're looking forward to. Expected to be a very strong listing, strong pedigree, good growth company. So, a big premium is what we list at. But once again, the question is, what do you do post-listing, right?
Yeah.
If there is that big bumper opening, like we saw in the past, then do you buy, do you sell? All of that will, of course, are questions that remain to be answered. But for now, the Nifty is holding on tight to that 20,000 psychological mark. So the going is pretty good.
Well, that's right, Sonia. The question is, the November series has been so good. Can the bulls end it on a high? They'll really be wanting that. And at the start of the series, you mentioned it. Don't be so worried that the FIs are net short. That could be actually a blessing in disguise. And if you pull up the chart, you'll see that the FI short positions, well, it's come down from around 175,000 net short contracts to around 115,000 now. That's the chart that we're talking about. In percentage terms, it's come down from around 89% all the way to around 71%. So the FIs, they have got stumped on the short side, and that explains one of the biggest reasons why we've seen such a big rally. Now, at the start of the series, we reassured you that, see, April series, well, you had the FIs that were aggressively net short, and you had a good bump up out there. Guess what? At the November series, you've got returns which is close to around 40% higher than what you saw in April. So November series, in fact, has been far better series in comparison to what we saw in April itself. What has worked in the last few days? Well, the Nifty Bank has come back in style. And just in the last 1 week or so, the Nifty Bank has outperformed the Nifty. We haven't seen that for the last few months. So this is very, very good news. And yesterday, you had a bit of a breakout moment. At the start of the session, I was talking about the 50 DMA being a bit of a resistance, the 100 DMA being a bit of a resistance. In yesterday's trading session, if you pull up that chart, you conquered both those two levels. So the Nifty Bank could be the one now that leads us higher because the IT index has done very, very well. That could hold one end up, but the Nifty Bank could actually drive home the advantage. 2 strikes were active, the 20,000 put as well as the 20,100 put, fairly active in yesterday's trading session. More than 2 crore shares getting added out there, and that's what caused the premium, the PCR, to move to around 1.5. There are now 2 strikes I'm going to pull up on the screen. One is the 20,000 put, where you have the highest open interest out there, and the 20,200 call. And since they have the highest open interest, we're just plugging in the numbers. On the downside, 19,975, that's the average of the premium of the 20,000 put, while on the upside, 20,222, that's the all-time high, 20,215. So that's the broad range that you should be having for today's expiry itself. Is it too early to talk about 21,000 odd? Well, 2 factors will play out. If the Nifty can get up and going, Santa Claus rally plays out, maybe in fact 21,000 could be there for the taking in the month of December itself. 2 factors there. One is a favorable state election outcome, and the second factor is a dovish Fed is what the global equity markets will be looking forward to. So we're on a strong footing, but those 2 will be the big cues for December.
All right. Well, that's basically the setup as you need to know as we start another session. So very close to new all-time highs. Jonathan Garner is Chief Asia and EM Equity Strategist at Morgan Stanley. He's joining us right now. Jonathan, good to have you with us here. Thanks very much. India is back at new highs. And, you've been very positive on the market here in India. I mean, actually, I think India and Japan have been two markets where you've been very overweight. So just kind of update us with your latest thoughts on India and the road ahead.
Yeah, so we think there are 2 secular bull markets ongoing in Asia, generally, one in Japan and the other in India. And I'm pleased to say both markets are doing well as we go through the year-end reallocation process, which is ongoing right now. And I think in terms of both those economies, we're getting strong nominal GDP growth, probably around 12 or 13% next year for India. What's important for India is the currency is far more stable than we've seen in the past against the US dollar, whereas other EM currencies, notably the Chinese renminbi, have been quite weak. And so the strong local GDP growth and earnings growth is actually translating to really strong dollar earnings per share growth. So if you go back to early 2021, cumulative earnings growth for MSCI India is over 60% in dollars, whereas for China, it's down around 20%. So we're seeing a complete breakout in India's performance relative to other major emerging markets currently, and it is our largest overweight by far.
Okay, that's a very optimistic way for us to start our morning. Jonathan, good morning and thanks a lot for joining in. Greetings of the season to you and your team at Morgan Stanley. So if India is your largest overweight, how are you positioned as we head into the big event, which is the general elections that happen next year? As per your past assessment or, going by history, how have the Indian markets performed in anticipation of the results?
Well, we don't make explicit comments on election cycles in any of the countries that we cover, though my colleague Ridham Desai did point to the fact that volatility might pick up somewhat. But we're very focused on domestic cyclicals in India, which goes back to that point about strong domestic economic growth. So if you look at the stocks that we have in our focus list, we have names like Reliance Industries, Larsen & Toubro, Maruti Suzuki, and you were just covering the banks. In our case, we have ICICI Bank, and that's very different in terms of the mega cap exposure to, domestic growth across the board in India. And actually, we're doing something quite similar in Japan. We are cautious on global economic growth next year. We do think the US will slow, and we think China remains very much in the doldrums. So it's domestic growth in India and Japan that we're very focused on.
Hi, Jonathan. Good to see you in. What are you expecting from the Fed? Because that's going to be a crucial factor that plays out. For the time being, the global equities are celebrating that the Fed is sounding a little bit more dovish than what they were, say, 45 days or so ago. What are you all penciling in terms of rate cuts for 2024?
Well, most of the time, the Federal Reserve is kind of endogenous to the system. It doesn't give us an exogenous shock. Sometimes, of course, it does, as we saw, for example, in the easing after the COVID pandemic. But we think the Fed will be gradually cutting interest rates next year, starting in the summer. And actually, it's also in the summer that we expect the RBI to begin to cut rates in India. But it's not of overwhelming significance. What's really going on is this strong domestic growth story in both India and Japan. And indeed, you're putting up on your screen, I can see also Singapore and Mexico. Mexico is another example of strong domestic growth, which again, like India and Japan, is benefiting from what we call multipolar world dynamics. All of those three are significantly improving in terms of inward foreign direct investment. And again, that's a feature of the world as people are looking to invest more outside of China in the corporate sphere.
The outreach from Chinese President Xi when he was in the US earlier this month, and we've seen some action back home in China after that visit, allowing more FDI in certain services sectors, and that MasterCard joint venture, etc. Will that help in that sense to repair relations with the rest of the world? Because this China plus one has been touted as a big push for markets like India. But is repair on its way in your assessment?
I think you have to put this into the context of what's been going on recently, where foreign direct investment in China turned negative for the first time in 25 years. So I think there's an attempt here to put a floor under a situation which has been quite bad for a considerable time. When we look at our nominal GDP growth forecast for China for next year, it's only around 5%, whereas I mentioned earlier about 12% for India. So we think this compounding of earnings growth and the superior ROE in India remains a key feature of the investment outlook.
You spoke about a couple of sectors or spaces that you like. You talked about Reliance, ICICI Bank. How are you feeling about the IT sector in general, Jonathan? I ask because, this is kind of like a Goldilocks scenario for the IT space, where on one hand, the US GDP has looked very good. On the other hand, bond yields have cooled off. Do you think IT could see an outperformance in markets like India?
Well, you're right that when yields come down, that typically helps higher valuation stocks. However, there are question marks over the US economy into next year. And typically, the sector actually is a kind of a currency hedge sector in the sense of international earnings. And I mentioned that the rupee has been strong, and we think it remains strong next year. And in addition, we have the new AI thematic. And it's not obvious how that will play out in terms of the IT services names in the Indian market. So they're not currently in our focus lists.
Right. Thank you for that quick call, Jonathan. Appreciate your thoughts, and Happy New Year once again in advance to you and your entire team at JP Morgan. Appreciate your thoughts here on CNBC TV18. So that's JP Morgan saying that India is their #1 overweight. They also like the Japanese market. But we have some more commentary coming in from JP Morgan this morning. Mixo Das reiterates their structural overweight call in India. He says the key driver is the high visibility of growth into multiple years ahead. In addition, he says that they see in the financial market a virtuous cycle of investor participation, deepening and broadening liquidity, rising fundamental coverage and analysis, and capital issuance, supporting the strong and unparalleled track record of risk-adjusted returns. Mixo says their bull case for the Nifty is 25,000, their base case is 22,000, and the bear case is 16,000 for 2024 end.
All right, well, some money market views. Parul Mittal of Standard Chartered Bank says that last week the dollar INR continued to trade in a narrow range despite downward pressure on the dollar and US rates on the back of strong month-end import demand. She expects that the USD INR to trade between 83.15 to 83.45 to the dollar next week. She says the dollar US rates stay key forex drivers along with oil price trends, with a close watch on the OPEC Plus meeting, which is today. Parul adds state election results this weekend will be eyed as well.
And on the bonds, Parul says global bond rates fell sharply on expectations of interest rate cuts starting early in 2024. In India, she says rates moved lower, albeit to a lesser extent due to domestic factors like the likelihood of higher inflation, state election results, tight overnight liquidity, and a larger supply from corporates, states as well as the government of India. She expects the 10-year benchmark bond yield to trade in a range of 7.2 to 7.3% next week.
Well, we've got a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. We're looking at Metro Brands, Nykaa, PCBL, Jupiter Wagons, and Karur Vysya Bank. All of them will be reacting to positive news flow. On the flip side, you have Thomas Cook, Tata Chemicals, GHCL, RR Cable, as well as Ram Ratna Wires. All of them will be reacting to negative news flow.
Okay, let's take a quick break. On the other side, our list of top 10 stocks lined up with our entire research team. Stay with us. Well, the bulls continue to be in absolute control of this market. Looks like this morning as well, we're going to open in the green. Remember, the Nifty has been holding tight at that 20,000 mark. And the US GDP growth was stronger than expected, so the data has also been looking quite good. But let's get to the top stocks for the day now. Mangalam is joining in first up to tell us why he's tracking Thomas Cook this morning. Mangalam, good morning.
Good morning. So Thomas Cook is in focus as the promoter entity has launched an offer for sale for about 6.8% equity, extendable all the way up to 8.5% equity. As of September, the promoters held about 72% stake in the company. The floor price for this offer for sale is 125 odd rupees, and this is a 21% discount to the previous close price, which was very close to the 52-week high of the stock as well. So to that extent, expect the stock to open in the red. But remember, it will depend on the bids that come in for this offer for sale and the price at which it is discovered. That will, determine the next course of action for the share price. Today, it is for the non-retail shareholders, and tomorrow the window opens up for retail shareholders.
Okay, all right, Mangalam, thanks a lot for that. But there are also a couple of more names you're looking at, Metro Brands as well as Nykaa. Tell us more.
Well, the reason why I'm looking at both Metro Brands as well as Nykaa is because the OG sneaker reseller store, Foot Locker, is coming to India through them. The companies have announced a tie-up with Foot Locker. In that, what happens is that Metro Brands will open all the physical retail stores of Foot Locker and run them under the brand. They will have a licensing agreement for the same. And the e-commerce operations in India for Foot Locker will be handled exclusively by Nykaa. And also, they will sell some of their sneakers on the Nykaa website itself. It is a win-win for all three parties, largely because one, Foot Locker gets a foothold into India, the large growing sneaker market that we're talking about. Metro Brands gets another way to, expand its retail network, whereas Nykaa Fashion as well gets another stream of revenue. However, what we need to understand from, both the companies, and we'll be talking to them shortly, one is the financial agreement between the three parties. The second one, the investment that will be put out in terms of physical stores and the e-commerce running operations. And thirdly, what is the incremental sales that they expect from a deal like this? But, this is a big moment in India's sneaker industry, largely because it was the one that started the sneaker culture, Foot Locker, in the US.
And appropriate, Mangalam, that you should be getting us that news and covering this in great detail, I'm sure.
You can actually, his excitement is so palpable, but I just want to remind him that he has a room full of sneakers. So, yeah. So you don't need any more pairs, Mangalam, really.
There's always room for more improvement and more sneakers. That's what they say.
Mangalam, I thought it was a cupboard full of sneakers, huh? Room full. So I upgraded my assessment.
Maybe we can try and clarify that with Sonal. She's also up next, right? Sonal, before you talk about Tata Chem and GHCL, just tell us, it's a room full of sneakers and not a cupboard full, right?
It is a room full of sneakers where my space has been taken away as well. So I would not like to actually add on to that, Sonia, but yes, that's the reality.
Okay, well, we'll talk about that off camera and we'll try and get a solution to that. But Tata Chemicals and GHCL also on your radar today.
Yes, because there's been a price cut in soda ash prices and that continues to be the case in the industry. Tata Chemicals this time around has cut prices by around 1,000 rupees per ton, which is for soda ash light grade, which is in the domestic markets. And for soda ash dense and the other category, it has been cut by 1,500 rupees per ton. Prices are different for different markets in different geographies as well. But so far in 2023, 20% cut has been seen in soda ash prices so far. Now, there have been talks about oversupply in the global market, something that Tata Chemicals said on its con call as well. There is oversupply which is more than what was expected, and that's why there's a lot of pressure on domestic pricing as well. And that's why Tata Chemicals has gone ahead and cut prices to basically compete with the imported prices that we are seeing in the country right now.
Okay, Sonal, thanks very much for that. More stocks with news flow. Vivek has got that list. He's with us here. Vivek, morning.
Well, good morning. Quite a few stocks on the radar on the back of news flow, post-market as yesterday. First on the list is PCBL, and the stock has been a stellar outperformer in the last couple of months. Recent acquisition. Now, one more news update coming in. The company has joined a JV agreement with Australian company Tata Tech. The company would be owning 51% of this particular JV, and the company would be infusing close to $16 million for this particular development itself. Along with that, the company will be infusing another $28 million in stages to go ahead and set up the manufacturing unit for this particular JV. The second stock on our radar, Jupiter Wagons. Interesting development over here. The company has gone ahead and launched a QIP to raise funds. Sources tell us that the issue size of this particular QIP is close to 300 crore with an oversubscription option of another 200 crores. The indicative price for this particular issue is 315 rupees a share, indicating a slightly over 7% discount discount to yesterday's closing price. The other stock on our radar, Karur Vysya Bank, the company has received the RBI nod to allow SBI Mutual Fund to acquire up to 9.99% stake in the company. Separately, the company also says that they've gone ahead and opened fresh 4 new branches, 3 in Tamil Nadu and 1 in Karnataka. Both companies, both RR Cable as well as Ram Ratna Wires, both of these stocks will be open. The Income Tax Department is conducting a search operation at some of the offices of both of these companies. Both companies say, that they are cooperating with the Income Tax Department. At this point of time, business operations continue as usual.
All right, thanks a lot for that. So a lot of stocks in focus this morning. Here's a quick recap in case you missed out on any. Stocks with positive news flow. There is Nykaa, PCBL, Jupiter Wagons, Karur Vysya Bank, Metro Brands, and stocks with negative news flow. Thomas Cook, Tata Chemicals, GHCL, RR Cable, and Ram Ratna Wires. But let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. But today is the most important OPEC and allies meeting, where there is an expectation that the OPEC will set production policy for 2024. OPEC and allies also are considering additional 1 million barrels per cut, that is deepening the cuts and perhaps extending it into 2024 is the reason you have the crude oil prices holding above that $82 a barrel mark. The street also is keeping an eye on the U.S. inventories, which have continued to rise, and that seems to be keeping prices in check. To that, it is the Chinese data. The manufacturing in the month of November has declined to 49.4, and even the services sector growth is at an 11-month low. That seems to be weighing on across the metal sector. So whether it's copper, zinc, steel, iron ore, we have seen some pressure come in for this sector.
All right, Manisha, thanks very much for that. So we'll keep an eye out on commodities and, of course, come back to you for more. We'll take a quick break here. Deepan Mehta of Elixir Equities will be joining us to run us through some fundamental stock analysis, what he feels about individual names. A little later, we'll also have the management of Suprajit Engineering to talk about their second quarter performance as well as business plans going forward. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, we've listed out entire trade setup, how the global cues, as well as stocks you should track. Well, let's get a little bit more in depth and let's do some fundamental analysis. We have Deepan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Deepan. Morning. Thanks so much for joining in. Well, Deepan, we have a couple of big cues, the state elections outcome in the next few days, but stock specific, there's plenty of action. Let's talk about Metro Brands and Nykaa as well. That tie-up has been announced overnight, where Foot Locker is going to be coming into India. I'm sure your son will be quite excited about the sneakers that will be on display. But what's your view on both these two companies?
See, first of all, Nigel, good morning and thank you for having me on your show. Nykaa, still I'm not convinced that it will really be a value creator. First of all, in the BPC space where they're doing well, a lot of competition is emerging. And on the fashion side, it's even more competitive. And I'm not sure whether at some point of time it will become solidly profitable. So a bit of concern on Nykaa. And the story doesn't appear to be as rosy as when the company got listed. Coming to Metro Brands, of course, that's a different, a completely different investment proposition. And the way they are growing the retail chain and premiumization, which is taking place amongst the consumer spending, that certainly is going to benefit Metro Brand tremendously. It's a very well-managed company. And within the retail space, I think if you're looking for secular growth story, then Metro Brand certainly fits that criteria. So very positive on Metro Brands. But one has to keep in mind that both these companies are trading at very, very rich multiples. And markets also, are at nearing about all-time highs. So I'd like to be a bit cautious from a timing perspective.
Okay. Deepan, hi, good morning. It's IPO season, right? Yesterday you saw a fabulous listing with Irida. And today you have Tata Tech. Expectations are banger listing there as well. Would you buy either of these stocks post-listing?
Good morning, Sudha. No, I think that my view is getting a bit cautious, and whether it is IPO listing or existing stocks, I just want to press a pause at this point of time. Valuations are a bit discomforting for a lot of these businesses, and in fact, there is cheaper options in the large cap stocks. Now that FIFOs are becoming positive, I'd like to focus on the likes of, say, Reliance, HDFC Bank, ICICI, these sort of companies, I think, for the outperformance going ahead. But large part of small mid-cap stocks are trading at very rich multiples. No doubt the story is great. There's good earning visibility, and there are many positives going for it. Excellent liquidity flows from domestic investors. But it's just an uncomfortable feeling where you buy a stock with hardly any margin of safety. 1 or 2 bad quarters, and these companies can easily correct by 30-40%.
So pause button very broadly. I mean, would that pause include, Deepan, hi morning, taking money off as well from existing
morning, Prashant. That's a
investments?
tough one. But at some point of time, I think from these levels onwards, one should certainly consider getting some amount of portion into cash on a strategic basis. At least don't make fresh investments, so whatever savings and cash flows are coming through, those go straight into the cash level to take advantage of a correction as and when that takes place.
By the way, Deepan, this rally over the last 2-3 days, what's your best sense? Is the market sniffing, a particular electoral outcome?
I don't think the elections are going to matter so much. It is more to do with solid liquidity flows coming in, slight cessation of FII investing, disinvestment or selling pressure. And the earnings season has been good. A lot of trading activities taking place, and more investors are coming to the market. So it's a liquidity force coming into Indian equities. And there's in terms of good quality paper, that's just getting bid up higher and higher. And you've seen that with the IPOs as well, that at any price in the grey market or the way the subscriptions are taking place, investors want good quality businesses. So those have become very expensive. One cannot really connect this to an election outcome.
Okay. There's also the auto sales that comes out tomorrow, and the expectation is that a couple of these pockets will look very good this time, whether it's, commercial vehicles. In any case, we've seen strong numbers come in even from the likes of Tata Motors, etc. At this point, are there any fresh auto stocks that you would look to buy or add on to in your portfolio?
No, not really, but keenly watching the monthly numbers which come through from Eicher Motors, especially those for Royal Enfield. We have been disappointed by the numbers which have come for the past few months, despite all the effort made in distribution and new model launches and even advertising for that matter. But the numbers certainly haven't come up to our expectations. So that's one company we are watching out for. Other than that, I think more or less numbers will be in line. And more than the actual volumes, the real game in these auto companies is the increase in realization. I think companies like Maruti and all, if you see from last quarter, this quarter, what they reported, there's almost 13-14% improvement in the realization. So that's all because of premiumization taking place, and the more realization you get from a single output, a lot of it goes towards the bottom line. So margins are actually improving, and that too, raw materials also are in a benign space. So when it comes to auto, it's not the volumes which matter as much as the realization and improvement in margins.
Okay. In fact, we do want your thoughts on some of these auto ancillary companies, especially the guys who are present in the domestic cable industry for the automotive sector. So Suprajit Engineering is the company that I'm talking about. Q2 was a bit of a muted quarter for them because they were struggling in the export business. They witnessed a decline in their revenues and in their margins. The overseas performance was impacted. We have K. Ajit Kumar Rai, who is the founder and chairman at Suprajit Engineering, who joins us now to talk about that. Mr. Rai, thanks a lot for joining us. There was a worker strike in the US. There was some weakness in your non-automotive division as well, because of which your overseas business was impacted. I understand that. But there was barely any growth in your top line. Your margins also were, slightly under pressure year on year. What's the outlook for the second half of the year? Do you see any recovery?
Good morning, and thank you for having me on your channel. The first half of the year has been a bit challenging, as you rightly said, for our international business. For a quick update, I think the domestic cable division grew in line with the industry. The margins have been in the high teens. The challenge has been in the controls division, which is our international business, due to the high interest rates, recession, non-automotive business having certain challenges, China relocation. They have had the challenges for the controls division, and that's why that division had a muted performance. Whereas both Phoenix Lamps division, which has been our halogen lamps business, had turned around nicely and had a double-digit margin. And our electronics division had a beautiful growth, and for the first time within a year of its establishment, has turned into a positive EBITDA margin. In terms of how it looks for the second half, I think the domestic cable business will continue to give a strong performance. So will the Phoenix Lamps division, and electronics division will continue to be growing very fast with growth in margins as well. Controls division will continue to have another challenging half year as we see. But overall business will grow, and margins will be in line with what we have seen in the recent past.
Okay, I want to talk a little more about the controls division because this has been giving you trouble for a while. In fact, in this quarter, the EBITDA for the controls division was down 7%. And I remember the last time you had said that, there is this ongoing restructuring which is taking place, which is putting pressure on the margin performance. How long will it take for the restructuring to be completed? And once it's done, what kind of growth do you see in the Suprajit Controls division?
I think first of all, let me make a point that global business in automotive is typically in single digits, high single digits. We are somewhere there. Of course, there is certainly a room for improvement. In terms of restructuring, I think now the recently acquired LDC from Kongsberg, our Suprajit Automotive, Suprajit Europe, as well as Westcon, is getting integrated in a sense. I think that work is probably another 3 to 4 quarters to complete it. So in terms of business wins, we are continuing to win some strong business in the automotive space. So the growth will be there. Margins will be, you mentioned the number. Hopefully it will improve over the next 2 to 3 quarters.
Okay. So another 3 to 4 quarters for this LDC restructuring to get completed. So is it fair to assume that it will take you another 3 to 4 quarters for the margins to get to double digit, right? Overall margins I'm talking about.
The overall margins, yeah, I think so, because that is the drag on our numbers. The other 3 divisions should be doing pretty well. And once the restructuring is completed, the controls division, we should easily and comfortably, get into double-digit margins. We are almost there. We are at about 9.5%, as I know. I think getting into double-digit is not really such a challenge.
All right. Hi, Mr. Rai. Good morning. In the past, you've done 12 to 13% margins. So the second half of FY25, do you think you get back to those levels?
No, as I said, on a consolidated basis, the margins will take some time to recover.
Got
On a
it.
standalone, you are right. We'll be in 15-16% EBITDA.
Okay, all right. I'm just looking at your press release that you last put out. You'll have done some outright purchase of industrial property in Jigani industrial area. I think that's in Karnataka, and that's in industrial belt as well out there. Could you tell us how much of money have you paid for this? What is the end use of this land? And you're going to be setting up something. So what would be the revenue potential?
The industrial land is measuring about 4+ acres of land with about, I think, 70 or 80,000 square feet of built space. And that's in the Jigani industry area, which is a prime industrial area within Karnataka. As you know, we have been talking about Suprajit Technology Center, and we are working on certain new products, which is beyond cables, which we are in the late stage of negotiation with some of our customers for a commercial exploitation. So the plan is to convert this industrial land into after doing necessary, upgrade and renovations that is required to be done. We are expecting to put to use for one of our, or maybe more than one of our, non-cable products into commercial production.
In fact, I wanted to talk a little bit about these new products, the instrument clusters, sensors, other electronic products that you're getting into. The last time you said that your content per two-wheeler will go up because of this. And you also talked about 50,000 rupees per unit at some point in time. Can you just, revisit those numbers? What is the content per two-wheeler currently? And how much can you raise it to?
I think, I don't know where the 50,000 has come. Let me make the point clear. And if you look at just the cables as a content per vehicle, maybe it's about 100, 150 rupees, 200 rupees maximum, or let's say 4 cables or 5 cables in a two-wheeler. What our stated plan now, or our goal is to increase that. And that's where these new products come into picture. For example, an electronic digital cluster will cost anywhere from, let's say, 700 to 2,000.
Yes.
Simple electronic throttle controls will be 400, 500 rupees. A electronic actuator for seats or locks will cost 300, 400 rupees. So our plan is clear that the content per two-wheeler will increase going forward.
All right, Mr. Rai, very quickly, the Phoenix Lamps division, that out there, the margins have improved to around 12%. So two-part question. One is, can margins hold on to these levels? And the second point, I just want you to clarify, at times people have spoken about possibility of you selling this unit. That's not happening, right, since it's turned around so well?
Let me answer the second question first. Absolutely no plans. I think it has been doing beautifully. A phenomenal success story, I would say, from a low single digit. We have converted into a double-digit margin business with a growth potential.
Okay.
All right. We leave it there, sir. Thank you very much for your time. Good speaking with you.
Thank you.
And it's a pleasure, as always. Good luck. Well, we'll take a quick commercial break here. There's 15 minutes to go for the pre-open session. We'll come back. Anuj will be here with the trade setup, and we have our technical and F&O experts talking about individual trades as well. Stay with us. Okay, welcome back. There's 10 minutes to go for the pre-open session. Anuj is here with a quick check on what he's making at the trade setup. Anuj, new highs before the election verdict?
Oh, absolutely. We hit the new, almost hit new highs, just 100 points away from that. But you know what? Today reminds me of 1991, the greatest action movie ever made, Terminator 2. It's the judgment day today, actually, for the market, for a lot of reasons. The most important being the exit polls that will come out, of course, in the evening today. So, after the expiry, and that's my sense that a lot of people may want to book profit because it's been a marvelous series. We've been talking about how the series could end very close to all-time high, and we're nearly there. And there's this OPEC plus meet also, last day of the month. So perhaps it makes sense to book some profit. The bulls have been in control, and yesterday the market broke out, helped by the Bank Nifty in the second half. The IT index, of course, has been doing well, but yesterday the Bank Nifty led the breakout, and both Bank Nifty and Nifty IT were up about 1.5% in yesterday's trade. IT index should get another leg up today because of the data from the US. The GDP number looks scorching, and that number didn't move dollar index or bond yield higher. I think that's the Goldilocks scenario for IT. The only worry, as I said, is the exit poll which comes out today. And of course, the Nifty ended at highest point yesterday. Today's number to watch is 20,162. If you start to cross that, then perhaps even a move towards all-time high is possible. The other thing which was important yesterday was, after a long time, we have started to see delivery buying in private banks. The first date yesterday, HDFC Bank, 1,500 crores of buying, ICICI Bank, Axis Bank and Kotak Mahindra Bank also delivery buying of about 500 to 600 crores. I think this is a number that you want to track over the next few days. Even the shorting from FIs, it's down from 89%, now down to 71%, but they are still short, so maybe some more covering is left. For the day, the levels I'm watching out for, 2162 on the Nifty as the first resistance, options based, and of course the bigger resistance is 20222, which is the all-time high. Support comes in at 19972 based on the put options, and the bigger support is 19875, which was the resistance and the breakout zone. On the Bank Nifty, the first support is 44420, which is from where you broke out yesterday, and 44100, which was the previous resistance. And on the upside, the resistance comes in at 44720 based on options, and 45,000 the even number. So that's something to keep an eye on in today's trade.
Okay, you reminded me of that movie, right? One of my most favorite movies, actually, Terminator, the whole series. What was that famous dialogue? Hasta la vista, baby, right? Market's gonna say that to all the bears, perhaps.
Hasta la vista, baby. Yes, absolutely. That's what bulls are gonna say.
All right, Anuj, thanks a lot for that. We'll chat with you again later. Dipan Mehta is still with us, and I think Dipan was listening in, to that conversation that we just had with the management of Suprajit Engineering. Dipan, any thoughts here? Because, this is a company that's not sort of moved with the times, especially with this whole EV adoption, right? Do you think it's going to fall back? Its domestic cable business is still doing well, but just because of how the auto sector is changing scenario, do you think Suprajit could move to the back burner?
No, so not really. I think most of their products don't get impacted by the electrification taking place, whether it's in the two-wheeler or the four-wheeler space. And the product profile also is pretty well diversified, and I'm sure even the customers are pretty well diversified. It's just that the company is a very low-profile performer, and therefore it may explain slightly cheaper valuations. But I think great prospects for Suprajit Engineering as well. And I think if the export business starts to pick up, then that could give a further fillip and open up new opportunities. But nonetheless, I think it would be a steady performer. And if you are betting on auto industry, auto OEM doing well for the next 2-3 years or so, then certainly Suprajit industry also should do pretty well over that period.
Investors of Suprajit will be hoping that there's another line from Terminator, I'll be back. Hopefully at some point of time. The outlook for this year, I think, is a little bit gloomy. I was looking at most brokerage estimates as well. But for FY25, they're penciling in some growth out there as well. Dipan, request you to stay with us. For the time being, let's get in our technical experts. You have Mitesh and Sudarshan are joining in this morning. Good morning, gentlemen. Mitesh, you go first. What a splendid rally we have seen, right? The Nifty Bank as well is breaking out. Levels you're looking at?
So, morning, Ajay. Very good rally, and in fact, the Bank Nifty is now trying to make up for the underperformance which it had shown vis-a-vis the Nifty for the last couple of weeks. I think both the indices look good to me, except for the fact that Anuj was highlighting the test of all-time highs can always, bring in some profit booking, especially when you've had a very good run in the last few days. So the level I'm watching on the upside is 22 to 220 for the Nifty. And but the Bank Nifty still has space to go up, so I would pencil in targets of 45,200 possibly even 45, 450 in the near term. So stay positive, stay long. There's no worry on the markets that they turn negative. But yes, some profit booking if it happens. I think that intraday dip, I would still want to add on to my long positions.
Got it. All right. And Sudarshan, let's get you in as well. You've been maintaining this long stance. You need to stay long, need to participate on the long side. Tell us what are the fresh levels you're looking at. Would you trade your stop loss? If yes, what would that level be?
Yeah, good morning. See, so far so good. We've been going long and staying long. I think the time has come for us to, and for traders to start considering taking profits. So there's no sense in just going and selling in the market because the market can go much higher. So the trade is, as you just said, trail your stop loss. Now, stop losses are different for different traders because if you're a short-term intraday trader, your stop loss is different. But I'll just give you a generic stop which will apply for most people. That's 20,000. So to keep 20,000 as your stop, and if the Nifty goes up higher, then slowly trail it, make it 20,050, 20,100 if the index goes higher. So that's how I would approach the Nifty. I would be now careful because the Nifty can become very choppy once it has big moves, and that choppy market hurts. But the big trend is now coming in the Bank Nifty. The Bank Nifty is a buying opportunity, and now here we can easily say buy every dip.
Okay, what about individual stocks, Sudarshan? What are we looking at this morning?
Well, individual stocks are mixed. Dr. Reddy's is a buying opportunity. There's a reasonably decent chart. Buy with a stop under 56.30. I have an intraday short just to temper all this euphoria. SBI card keeps on coming down. It's an intraday short with a stop above 750. Infosys is a buy. It is in a trading range, but yesterday it just peaked out of that range on the upside. That's interesting. Buy with a stop under 1440. And finally, Apollo Tyres is a buy. Had a big rally, a very small correction, and a resumption of that rally. So buy with a stop under 420. Generally, Sonia, it's time to be cautious.
Okay, well, you're echoing what Deepan was telling us earlier. Gentlemen, morning. Mitesh, what about you? What are your trades?
Prashant, I have all long calls today. A buy on Axis Bank, given the fact that it broke out of earlier highs, the supply pivot of 1040, 1045 is now being taken out. So I expect the rally to continue to about levels of 1100 and buy here with a stop at 1040. Disclaimer, we have some call option positions over here, so there's vested interest. Grasim is a buy with a stop at 1984 for targets of 2040. LTIM, that's Larsen and, that's Mindtree. That's a buy with a stop at 55.40 for targets of 5,700. And Indigo is a buy with a stop at 26.60 for a first target of 2750. And again, a disclaimer that I have it in my portfolio, so there is vested interest.
All right. We'll come back. I have a few other stocks want your views on, gentlemen. Thanks very much for joining us right now, Mitesh and Sudarshan. We'll take a quick commercial break here. We'll come back with a pre-open session. We'll also have Gurmeet Chadha of Complete Circle to talk about the new listings. There are actually 3 today. There is the big one, of course, is Tata Tech, around which there'll be a fair bit of focus. What after what is expected to be a bumper listing? Stay with us.
All right, we're gearing up for another day of trade, and we're, just a smidge away from those all-time highs. It's just a matter of when and not if that we get there. Chandan Taparia is joining in. He's the derivatives analyst at Motilal Oswal Financial Services. Chandan, hi, good morning. What are your thoughts about how the Nifty could shape up here on, and what are the stocks to look at?
Good morning, Sonia. Thanks for having me. So finally, Nifty managed to surpass an immediate hurdle of 19,888 in last two trading sessions, and now all set to hit towards the new lifetime high and way beyond it. So we believe this momentum could extend, and if I go to the monthly chart, the Nifty is forming a typical pole and flake price pattern, which indicate further 500-800 points rally cannot be ruled out. So as of now, the data internals are quite positive. Indices are likely to see the fresh up move. If I look at the put-call ratio, that has moved from 1.22 to 1.47. We slightly moved because call writers got trapped and call unwinding pressure is clearly visible in the market. In this entire series, we are up by around 6.5% and trading higher than series VWAP and weekly VWAP, which indicates that further momentum could accelerate. So we believe with support of 19,888, this rally can even extend to us 20,500 level. But for intraday point of view, we'll keep the support of 20,000 and look for a new high to us 20,222 to 20,250 zone. Now talking about Bank Nifty index, Bank Nifty, which was slightly underperforming, has surpassed its falling supply trend line. On daily chart, it formed multiple price pattern, including an invert head and shoulder pattern, cup and handle kind of pattern, managed to hold its 50-day exponential moving average, open interest addition with short covering, also suggesting further upmove in the Bank Nifty index, and counter from PSU and the private, including Axis Bank and Canara Bank, has added momentum in the index as well. So looking for a fresh move in Bank Nifty, given the breakout, needs to hold 44,444 to drive the rally towards 45,000. Now looking at the stocks, first trading idea, that is buy on Nifty Auto segment, that is buy on Tata Motors. Nifty Auto itself is in on the fifth gear and heading to the new territory. We have seen fresh momentum in most of the auto counter, and Tata Motors is one of the strongest setup. In last 160 days, it never gave below 50-day exponential moving average. 5 to 8 times it respected the same and turned higher. So recently it has given the fresh breakout. Momentum could continue. Longs are being added, so one can buy with support of 688 for an up move towards 735. Second trading idea, that is buy on Canara Bank. This PSU name has taken support in the previous resistance zone. So role reversal kind of pattern with some put writing activity. So looking for a fresh up move, one can buy with support of 393 and expecting a rally towards 424 level. Last trading idea, that is buy on HL. One of the strongest counter recently gave the breakout 3 days back. Open interest addition are clearly visible. So expecting fresh momentum in most of the defense counter. So one can buy HL with support of 2300. And here we are expecting a rally towards 2450 levels.
Okay, all right. Thanks a lot, Chandan, for stopping by and giving us your view, and wishing you a good November expiry day. The series has been good for the bulls. Wishing you a good day. But let's focus on the new listings and the new debutants on the Dalal Street. Tata Technologies, that's one of the 3 companies that will be listing. Rima joins us first up to run us through all the details of the much-awaited listing. Rima, tell us more.
Thanks so much for that. So much excitement, so much frenzy. The first IPO from the Tata Group in 19 years. The last one was TCS in 2004, and the IPO saw bumper subscription overall at 69.4 times. And in terms of total applicants, the Tata Tech IPO received 73.58 lakh applications and 1.5 lakh plus crore in terms of investment. In fact, the total applications received for Tata Tech, I believe, has broken LIC's record of 73.38, which happened in May of 2022. So let me quickly tell you what worked for Tata Tech. One, it was a small issue, just about 3,042 crore in size. 2, the valuations were reasonable. Tata Tech at 500 rupees, which is the issue price, was offered at 32 times past multiple FY23 PE, which is at a discount to all the listed peers like a KPIT, L&T Technology, Tata Elxsi. Third, the financials of the company have been steady. Now, this is a company whose top line last year was about 4,500 crore rupees. It grew at 28% in this year, first half of FY24. The prior year, it grew at about 28%. The year before, at 24%. Margins too, over a 4-year trajectory, have seen an improvement. It was at 16.5%, and now it's hovering around that 18 to 19%. But the good news is, the company in an interview told us that their North Star margins are 20% plus. So they have aligned their business plan in order to keep improving their margins and go up to 20% plus. Fourthly, it's a Tata brand. There is a lot of respect which comes along with the Tata Group companies. Fifth, it operates in a space, the manufacturing ER&D, particularly aerospace, automotive, which is seeing a lot of disruption and seeing a lot of spends by clients. So the space itself is very hot, and we know how companies like KPIT Tech have performed. And finally, this was a pure offer for sale. The company didn't raise any money, but they have cash in the books. The cash in the books as of last year was about $150 million. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, let's discuss on the new listings today. Gurmeet Chadha, Managing Partner and CIO at Complete Circle, joins us, and Deepan Mehta as well is still with us. Thanks, gentlemen, for joining to talk about these IPOs. Gurmeet, you go first. Sonia and me were discussing this yesterday. Those that didn't get, they'll be so depressed, that we missed out on such a great IPO, which is going to give bumper listing. But what about the guys who got in? For them, it's even more tricky. Imagine you get 50, 60, 80% on the first day. Then what do? Do you say, I'm a long-term investor, I want to stay in here? Or do you take some money off the table and have a good party over the weekend?
Actually, Gurmeet and Deepan both have big smiles on their face. So let's ask them whether they got a lot.
Did y'all get? Have you? Any of y'all have got? Gurmeet, what about you?
No.
Unfortunately,
no. But we are going to apply around pre-open. Let's see.
That's the point. That's the point, right? I mean, even on a pro rata basis, people have not got, first of all. Those who got would have got how much?
Yeah.
So you're basically looking at, even if it lists as a 400 rupee premium, it's nothing. So actually the question is whether you buy after a 400 point, not take profit, because it's a small, based on the subscription levels.
What would your profit be anyway?
You've not gotten very much.
Prashant's given us his verdict. Guys, what do you all take? We were talking about movies earlier today from Munna Bhai. I remember that. What's the procedure to change your classroom over here? What is the procedure to start getting in these IPOs? Because a lot of them are giving you a lot of bump up in terms of listing only. But Gurmeet, on a serious note, tell us, what do you do?
So Nigel, I think we expect a stellar listing. We'll probably go staggered. I have a very strong view on digital engineering and ERD capabilities being built by them. If you see, they work with top 7 of the auto OEM ERD spenders. They work with top 5 on the energy ERD spenders. They recently got empaneled with Airbus, which gives them a lot of leeway on the aerospace side. In fact, they reverse engineered some parts for Air India when they were converting their planes to cargo planes. And they are on the complete value chain. So also what I like is their geography specific strategy. So they are on the EV side on China. They are working on, with the defense and aerospace space in France. And in Germany, they are working on the software embedded capabilities, which is what KPIT and others are. So they are on the complete value chain, great brand. And I respect for Tata Group. They could have priced this much higher, considering the valuations and which peers are. But this is what they are. And that's why there's so much of respect for them. So we want to apply in a staggered way, maybe try and get about 1% of the portfolio. Maybe today, if we are lucky, if there is no upper freeze. And then maybe, once the euphoria settles, if there is any negative market reaction to some events non-related to the company, maybe build on more. But very core portfolio stock with us. We've benefited a lot on KPIT. We also got benefited due to Tata Motors moving up post the IPO. So we are not complaining much, to be honest.
Ramit, when you say apply, you mean buy now, right? Buy in a staggered way.
Absolutely. We will try and buy something today, whatever little we get, as I said, some function of what price. We'll try and see if we can get something to pre-open. But let's see. As I said, I want to build it up over a period of time. So I don't have a listing view or 1 month view on it. Probably have a 5-year view on this.
It came to the market at, I think, about 28 times earnings, 1 year forward earnings, as compared to whatever 80 times which KPIT was trading at, and of course Tata Elxsi, which is also expensive. But if it opens at whatever 800, 900, some are saying 4 digits, you basically are looking at that gap, largely getting close. It'll go up to about 55, 56 times or whatever in terms of forward earnings, maybe a little bit more. So we'll see. Deepan, same question to you. By the way, there are 2 other listings as well. There's Gandhar Oil, which makes its debut, which also, by the way, got a very strong response. FET-FINA was the only one where there was not very much participation or excitement.
Yeah, that's right. But I think the entire limelight will be, of course, Tata Technologies. And, I agree with what Gurmeet has said, that if you want, it's a great company. And really appreciate that even when the entire industry was going through a lot of stress, this company has reported good earnings. In fact, the numbers are slightly better than even Tata Elxsi for that matter. So I think that it will trade at premium multiples, and it's best to stagger your purchases. and maybe 6 months down the line when dust has settled down and volatility has reduced, and if there's a correction in the market, that's a good entry point. But this is a company really worth watching. And if you look at the entire spectrum of verticals within the tech space, this auto OEMs, aviation are the ones where we expect least amount of tech spending cuts per se. And in fact, the demand from there is going to keep on increasing because of the disruption taking place over there. So very positive on Tata Tech, and let's see how one can get into this stock, maybe on listing or maybe a few weeks or few months down the line.
Okay. There are so many of these big companies, right? I mean, there's IRIDA as well. So I wanted your thoughts on that, Dipan. People, I mean, the listing was big bang, but post-listing now, post the rally that we've seen, does it still make sense to buy? Because according to me, this is a huge long-term story. I mean, the largest green financing business in India, mini Navratna company, strong growth compared to peers. So despite the rally, would you buy something like IRIDA?
No, not really. I think, my experience with IPOs has been to best look at them 6 to 12 months down the line. You have the, 2-3 quarter numbers have come through, better understanding of the company, what their communication is. And overall, I think the euphoria has died down, and therefore P multiples also do tend to subside. And many more than often, I have noticed that, 1 or 2 quarters immediately after listing are not all that great for whatever reason. So I just like to wait and watch. All I can say is that, the markets are getting more and more interesting, and we're getting a lot more choice in terms of investment themes and good quality companies which are getting listed. So that's great news, I think, from an investor's perspective, because you will have ideas even when the market is correcting. Some more companies will do even better, and great quality businesses are being listed. So more the choice, the better it is to generate the alpha.
Thanks so much, gentlemen, for joining in and giving us your view on these IPOs. We appreciate it. Wishing you a good day ahead.
Nigel, what they say about IPOs, right? I mean, the old abbreviation of IPOs, it's probably overpriced.
Did you just make that up?
It's a very old...
I never heard it, sorry.
I mean,
but this was
use it jokingly, but this wasn't. And that's why I think, along with, of course, the Tata name and everything else.
At a time when companies are listing, not making profits, stocking up the market and trying to take maximum off the table, you priced the IPO at around 32 times where you could have actually done it better. So kudos to the management.
And it's not as if they would not have known. I mean, the Tata brand behind it, I mean, the right industry, etc.
Indeed.
And another company listed at much higher valuation, which pretty much does very similar stuff.
True.
So absolutely, kudos to them for doing that. I think we are approaching the market open 5 minutes out. Sudarshan is with us for 9-10 calls, and so is Mitesh. Gentlemen, morning again. Sudarshan, what do you have?
Consider buying Infosys with a stop under 1440.
Mitesh, what about you?
I'll choose a buy on Grasim with a stop at 1984, targets of 2040.
Okay, well, let's get to the pre-opening rates and talk about some stocks now. Zomato is in focus. Mangalam is here to tell us why he's watching that one. Mangalam, over to you.
A lot of reasons why Zomato is in focus, most of them positive. This morning, we've got a note coming in from Citi saying that the stock has corrected about 7% from the end of the Cricket World Cup, and that's largely because of media reports suggesting that there could be a new GST penalty on customer delivery charges. What this means is that customers of the non-gold program would have to pay 5 rupees more per order. As a result of which, Citi believes that, the adoption of gold program could increase and the growth impact could be rather modest. And as a result of which, they have a buy rating on the stock with a target of 145. Jefferies too has written on Zomato and the India internet business by taking away from Process's results, and they found out that Swiggy's food delivery business grew faster than Zomato. They gained some market share from 45% to 46%, but it's the hyper-local business. Zomato's, Blinkit grew much faster than Swiggy's Instamart, and Zomato remains more efficient and a market leader. Remember, Swiggy's market share has fallen from 52% in 2020 to about 45% in 2022 itself, and as a result of which they too are excited about Zomato's hyper-local opportunity and efficiency in the food delivery business. They remain buyers on the stock too. And finally, we have a note coming in from UBS this morning. They've increased their target price from 125 to 150 odd rupees, and that's because they build in a near 500 basis points improvement in the food delivery margins and 860 basis points improvement in overall margins between FY23 to FY26.
Thanks a lot for that, Mangalam. Well, Vivek joins us to tell us about the November review of the MSCI index. Morning, Vivek.
Well, good morning. On November 15th, we told you about the list of inclusions, as well as exclusions as far as the November index review of the MSCI was concerned. Today is the day in which, the changes will actually occur. So today, India is expected to receive inflows of over $1 billion as part of the overall review of the MSCI-based passive index funds. So which are the stocks that will remain in focus? The stocks that have been added into the MSCI Standard Index are the ones that will receive the maximum inflows. So APL Apollo Tubes, Tata Motors DVR, Macro Tech Developers, Tata Communication, all of these stocks will get included into the MSCI Standard Index. Even Persistent Systems, large flows of over $220 million there. IndusInd Bank, over $300 million of inflows expected today. A Polycab 197, that is Paytm, as well as Suzlon 2 makes its entry into the MSCI Standard Index. Suzlon will receive inflows of over $240 million. Apart from that, the MSCI India Small Cap Index too, has seen 42 additions and 19 deletions. Amongst them, some of the key names that we will keep an eye out for are Gateway District Parks, Ahluwalia Contracts, as well as Gokuldas Exports.
Okay, thanks a lot for that. Looks like it's going to be a decent opening for the market. So just counting down to just a couple of minutes left. Mitesh is still with us. So a quick comment from his end. Mitesh, the banks saw large delivery-based buying yesterday, private sector banks. What would be your top pick from the list?
So I have, given Axis Bank as a recommendation with the disclaimer that we have some call options positions over there. But I think the entire pack looks good to me, except, maybe Kotak Bank, which still needs to get into some kind of positive mode. Yesterday, we had a buy on HDFC Bank. I think that started a rally. We should see the stock head towards 1600 plus levels. The one which is missing from the scene, I think, as I said, is Kotak Bank, which if it starts getting past the recent consolidation pivots of 1775, 1780, then we might even fire a buy there as well.
All right. Thanks a lot for that. Well, all set for the opening. By the way, IRDA, day two is also looking pretty good for IRDA, actually. 7% higher on that stock. So post-listing and the Big Bang listing, there is still more traction over there. But the bulls, as we said, have been tightening their grip on this market. We're just within kissing distance of that all-time highs. And looks like it's going to be a good Thursday of trade. So here we have it. The first tick on the opening bell, a solid 25 points higher. Okay, that's not solid from any angle, but it's in the green nevertheless, right? We got to sort of celebrate all wins. Small wins here for the market, 30 points in the green for the Nifty, building on to its gains now. 20,130 and holding on to that psychological level. The sensex is up 100 odd points. The Bank Nifty is also in the green, up about 116 points. So good opening, decent opening for the market, building on to its gains from yesterday. What's leading from the front is auto stocks. Hero, Eicher, Tata Motors are all in the green, up about 0.5 to 2% Auto sales come out tomorrow, so we'll focus on that later. Oil marketing companies have been doing well. BPCL is up 1.5%. Cement stocks are back. Grasim, Ultratech Cement, all in the green right now. Titan continues to put on weight, up about 0.5%. And then you have something like an LTI Mindtree, Power Grid, Divi's Labs, Dr. Reddy's, all doing pretty well in trade. So what's lagging is Reliance is slightly under pressure, nothing alarming. Tata Steel, Asian Paints, JSW Steel, Bharti just flat with a bit of a negative bias, and Maruti as well, flat with a bit of a negative bias. But the market is holding on to its gains from yesterday and sort of building on to the weight. As we were telling you earlier, the standout performer in the last few days has been the Bank Nifty. There has been a breakout in the Bank Nifty, and that's something that continues. Once again, 120 points in the green for the Bank Nifty. The star of the moment has to be IRDA. So after the big rally yesterday, it's another 13% higher for IRDA this morning and piling on the volumes as well. So clearly all the action is in the new listing.
Well, that's right, Sonia. IRDA is the one that's flying away. So big gains is what you're seeing out there. Even if you bought yesterday, you'd be happy because you'll be making some money today. PBCL, that one's up and about in today's trading session. They announced a big deal yesterday with their foray into specialty chemicals. And overnight as well, they've signed a JV agreement with an Australian company. That's Kinal Tech with a $44 million infusion. So that one's up close to around 3%. Kesram Industries, there's a meeting today. We'll have to see what's the outcome out there. The stock has seen a big rally already from the recent lows. It's up close to 100%. It's one of the top volume gainers after the last few days of being in circuit. We are seeing some bit of selling from the high point of the day. Let's see what's the outcome of the meeting with regard to debt repayment as well as debt refinancing. Nykaa, they have announced that tie-up with Metro for for the sneakers. So that one as well is up close to around 2%. You have Suzlon. Some of that rejig, I think, rebalance had to take place. So that stock as well is higher. It's up close to around 1%. It's seen a bit of selling in the last few days, but that one for starters as well holding in the green. And I think Poonawalla Finance, that one as well is one of the top volume traded stocks. That as well is up close to around 3.5% or thereabouts. Prashant, what else?
Poonawalla was a big mover yesterday. It was up, I think, almost about 7-8%, and it continues with the gains today. I mean, actually, you mentioned Nykaa. Look at Metro Brands as well, which is up 5.5%. So 1,400 plus on Metro Brands on very large volumes for this point in the day. And look at Hero MotoCorp. Hero MotoCorp is the top gainer with large volumes, 3% on Hero MotoCorp. Stocks at almost about 3,900 rupees. Coming through. So that's a big one. PCBL from yesterday, that's up another 3.5% today, 275 or so. Aster DM went up 18% yesterday. And maybe we can look at what's happening today, the day two after that announcement. It's down a little bit, little pullback, about 3% or so, and decent sized volumes for it as well. Satin Credit Care, Satin Limited that is, 9% gains on large volumes. So about 118 or so. Okay, sorry, beg your pardon. That's not Satin Credit Care. That's another Satin. But Credit Care is up as well, 0.5%. Loda, that is Macrotech Developers, is coming out with volumes, but nothing very large in terms of price action. And Karur Vysya is down about 1.6% or so. Market breadth is positive, and we'll see how this progresses. But over the last 2 days, one thing we've seen is, even yesterday, the Nifty was up 200 points, so a big day, but only about 100 stocks separated gainers and losers by the close, by 3:30. On the downside, some of these Adani stocks, which have kind of gone through the roof for the last 2 or 3 days, are seeing small profit bookings, 2%, 3%, 3.5%, but that's sheerly just profit booking coming through. Timken is coming up with a 1.5% cut. It doesn't show up with volumes, but it is this morning, so keep an eye out on that one. And Torrent Power, which had that massive move, 11-12% yesterday, it's starting tentative, 1/3%, 0.5% lower. RR Kabil is another one, which is down about 3.5%. And look at Honasa. Honasa is now, last week and the week before that were very large. So, compared to where the price was 2 weeks back, the price was 350 2 weeks ago. And the high was almost $500, earlier this week. Now, actually earlier last week, it's come down to about 410, from 500 to about 410 very quickly. So it's coming off another 4% this morning, and it's got some volumes as well. We'll track this one. Harsha Upadhyay is with us, President and Chief Investment Officer Equity at Kotak Mahindra Asset Management Company. Harsha, great to have you with us here. Thank you very much for your time. Banks are starting to move finally, Harsha. That in a way, expectation which has been espoused by so many that it's the safest part because valuations are not out of whack, and this should do well, and everything which is happening in the economy feeds into banks and financials at the end of the day, and one is starting to see participation. Your thoughts?
Good morning, Prashant. Yes, clearly we have been talking about banking and financials for quite some time now. If at all there is a pocket of comfort in terms of valuations in the market, definitely it's one of those pockets. And we have seen consistent credit growth. There are no issues on the asset quality side as we are at the nascent stage of our new upcycle. So overall, I think this sector also doesn't have so much over ownership that it used to have in the past. So all in all, I think it's a valuation comfort that you'll get if you are investing into this sector. And anyways, there is a reasonable amount of growth that you can look forward to from a medium-term perspective. So definitely one of the sectors where you need to have good exposure.
Okay. By the way, there is a lot happening in the market, so don't be fooled by the flat move on the headline index. Just look at the moves. Axis Bank, by the way, is at a fresh 52-week high, above the 1,000 rupee mark, 1,060. Talking about 52-week highs, Hero Moto is at a fresh high, and a lot of people have been talking about the underperformance that Hero Moto has seen compared to its peers and how it could play catch-up now. So it's a fresh 52-week high over there. Hindustan Aeronautics, fresh 52-week high. Muthoot Finance, HCL Tech, across the board really. Ultratech Cement, Lupin, Titan, Colgate, the list is endless. Harsha, thanks a lot for joining in. I wanted to talk about a couple of spaces, right? One of them is banks, because now we are seeing participation come back. The Bank Nifty has broken out. There's large delivery-based buying in a lot of private sector banks. As a retail investor, has the time come to allocate more money to private banks now?
Sonia, clearly banking is one of the fulcrums of our economy, and as economy continues to move along 6.5–7% kind of GDP growth, definitely there is going to be a reasonable strength in terms of credit growth that we can expect. And also, as we have all seen, the asset quality cycle has improved quite a bit. There are no big issues that you need to be worried about. And also, this is a sector where, if you look at the recent performance, it has lagged the overall market performance or the performance of some of the sectors which have clearly outperformed this sector. So from that perspective, I think not only you are looking at a reasonable amount of growth as you go forward, you are also having comfort of valuations and not so much of over-ownership in the sector. So I think whether it's an institutional investor or a retail investor, I think it's one of the good spaces that you can really look at.
Harsha, what are you doing across portfolio? I mean, what's the view? It's been a good run for the markets across the board. But are you with the margin still holding that overall slightly cautious view, Harsha?
Yes, on the broader end of the market, we are slightly cautious. As we have spoken many times earlier as well, the valuations are slightly beyond our comfort levels. However, on the large cap side, it's very well within our zone of comfort. So we continue to like large caps over mid and small caps in that sense. Overall, on equities, we are still constructive. The last quarter earnings were very, very good. There was about a 7% beat on earnings. As we go ahead, we may not have the kind of favorable base that we had in June and September, but still the growth is going to be reasonably strong, high teens kind of growth. So overall, we are looking at reasonable returns from equities, even from the current valuations. However, on the mid and small cap side, one needs to be a little cautious given the valuations which are higher than our comfort and higher than long-term averages as well. And also the earnings expectations are much higher in the mid and small caps as compared to large caps. So in case there is any headwind, the volatility could be higher both in terms of earnings as well as in terms of market performance in mid and small caps.
So how are you sort of protecting yourself from any downside in those two mid and small caps? What actions are you taking, Harsha? And where are you sort of trimming, selling? What exactly has been the strategy?
We have been very cautious on the valuation. So in the pockets where we feel uncomfortable on valuations, we gradually continue to reduce our positions within mid and small caps. We also keep a very, very diversified portfolio in these two segments. So to that extent, we kind of manage our overall risk from a portfolio construction perspective, which is very, very diversified. And also we have a little bit of cash. It's not that we are managing volatility through cash, but definitely cash gives you an opportunity whenever there is volatility in the market. You'll be able to buy some of the stocks that you like at probably slightly lower valuations. So that also gives a little bit of comfort. And also if you see any unforeseen redemptions, which have not been the case until now in this segment, but in case something happens, we should also be able to give the money back to the investors without really impacting the portfolio. So that's the thought on mid and small caps.
Harsha, how are you all placed on the pharma space? You know, if I take a look at the pharma space, that's outdone the Nifty for this year. And remember, it went through a few years of absolutely doing nothing. So select stocks are doing quite well out there. What's your view? Do you stick to some of these domestic names or would you like some of the US generic names?
We have a mix of domestic as well as export-oriented pharma names in our portfolio. In fact, over the last couple of months, we have slightly increase our overall exposure to pharma. And as we speak, we have also launched an healthcare fund, which will be focusing on the theme of hospitals, pharma, and other related sectors. So we believe that from a medium-term perspective, there is a reasonable amount of traction that we are seeing in terms of the growth rates, and probably a good time to really build that thematic exposure here.
Okay. I wanted also your thoughts on the IT space. How are you feeling about that now? Do you think there could be a degree of outperformance on IT purely because what's happening with, you know, lower bond yields in the US as well as now lower risks of a recession, GDP growth has picked up over there. Would you put more money to work here?
Not yet. While we have been watching what's happening to US Treasury yields, but it seems more like a short-term reaction to what has happened in terms of Fed reaction to interest rate hikes in the recent times. However, given the strong rate of growth in the US economy, very unlikely that US will be looking at cutting interest rates anytime soon. So I don't think you are going to get that kicker in terms of valuations because of lower interest rates. And when you look at overall business momentum, it is still very patchy. So to that extent, there are many other domestic sectors which are offering better growth at this point of time. So while we continue to hold some names in the IT sector, but it's not been one of the overweight positions in our portfolio.
Okay, all right. We leave it at that. Harsha, thanks a lot for joining in and have a great day. Well, for the market, it's very, very quiet, but IRDA is really the star of the show. 13% higher now on that stock. A big bang listing, and I think over 1 crore shares traded already on that name, if not more. But renewable energy sector is clearly in focus, right? I mean, IRDA is green financing so many of these businesses. 30% of their business goes to solar, 20% to wind. So we're going to talk about this entire pack. There's the COP28 summit that kicks off in Dubai in a couple of days from now. So, you know, we're going to, of course, focus on this, the buzzing stocks from this sector. One of them is Suzlon Energy. The stock has surged 30% in November, is up over 270% this year so far, and it's also entered the MSCI Standard Index. To discuss more on the company's business momentum, we have Girish Tanti, who's the Vice Chairman at Suzlon, and Himanshu Modi, the Chief Financial Officer at the Suzlon Group. So both gentlemen join us now. Gentlemen, morning to both of you. Girish, I want to start with you first, you know, because there is this whole COP28, this discussion on the chatter on green financing has picked up a lot as well. Are you hopeful that we can fast track this energy transition before 2030? And what are the gaps that still exist in the system, which could perhaps be a hindrance for the, you know, in this whole transition progress?
Yeah, good morning. I think, you know, today if we see across the world, I think there is a more convergence at its peak in terms of climate change as an issue globally. And I think with that, the energy transition plans for, you know, across the world, I think the alignment between governments on setting up their green transition goals is at peak right now. We are also seeing increasingly, you know, huge amount of ESG funding that is reaching out in this space. And I think as the time is, you know, over the time, we have been seeing that the cost curve for renewable energy supply is also going down. These factors combine themselves in bringing a situation where I think transition to green energy is getting speeded up.
We also have Himanshu Modi, who's the CFO of the company, joining us now. Himanshu, there has been a big turnaround for the company as well, right? You had that successful rights issue, you've reduced your debt, you're sitting on a very strong tendering opportunity. Your order book currently is at 1.6 gigawatts as of September. Can you tell us what is the kind of order visibility you have from here on, if you can give us the numbers, and what is the kind of revenue growth that you're looking at?
So hi, as you rightly said, we have about 1.6 gigawatts of confirmed orders with us, and that order book is likely to be executed over the next few quarters. We also have a very strong order pipeline, which we are in advanced stages of negotiation currently. Of course, I'm not at liberty to reveal numbers at this stage. You know, we will make those relevant announcements as and when we convert that pipeline into confirmed orders. But all in all, I mean, you know, the industry from tailwinds perspective looks quite promising. Having said that, yes, there are certain challenges on ground which remain with regards to project execution, power evacuation, etc. But I think those will get ironed out over a period of time. From, of course, financially, you know, the company is in a very, very good shape now compared to last few years. As you rightly said, we've done a good rights issue last year, followed up with the QIP, as a result of which we are sitting on a net cash of about 600 crores in the company as of 30th September. So that puts us in a good position to execute the order book that we have.
You know, morning, gentlemen. Girish and Himanshu, Prashant here. And I just want to congratulate both of you. I mean, you guys have been the classic turnaround story. They say turnarounds rarely turn, but I think with the case of Suzlon, we can make an exception because, it has turned on how. And it's in the right space, it's got the tailwinds, etc. Girish, but since we don't get the opportunity to speak with you very often, what's next for Suzlon? The big picture story is 10 gigawatts of ordering, as Himanshu's been telling us here on the channel in our many interactions. 10 gigawatts of ordering every year, right? Before the crisis, etc., used to have a 25-30% market share of the order or the sort of orders put out. So you probably get back to that. Is that kind of the steady state roadmap from here? We should watch out for Suzlon, or are there other plans afoot? What's the thought process?
Yeah. Hi. Good morning. I think if you see today, I think with the target set for our country by our Prime Minister, a very bold target of 50% of renewables by 2030 and net zero by 2070. I think this has set out a clear roadmap for growth of renewable energy in our country. And we are seeing across the Indian inks, adoption of renewable energy in a very fast way, setting out their own renewable energy targets and net zero targets. I think with this, policy framework in place, the demand side also getting speeded up. And I think the kind of work that government is doing today on debottlenecking the implementation, be it on new grid infrastructure, policy implementation at a ground level, and all those things. I think with that we are seeing that the road to go to green for everyone is becoming much smoother on that ground. And I think we being one of the key players in this industry, we are continuously focused on our technology developments and making sure that as a country, we are very well equipped. And also over the last 30 years, we've developed a very strong ecosystem across the country on developing MSME segment and making sure that we are, developing products with an Atmanirbhar focus. So Make in India is a very strong element of what we do. And I think as the markets grow, definitely, Suzlon will kind of make sure that we continue to play an important role in this.
All right. Good morning, gentlemen. And thanks so much for joining in here on CNBC-TV18. Your order book is around 1.6 gigawatts. If you could tell us, by when will all of this be executed? Point number one. And point number two, the new orders that are coming in, what's the time horizon that it actually gets executed? The reason I ask you is because some part of the market is a little bit worried that the new orders that are coming in, delivery is getting pushed back a little bit. Could you clarify on that aspect?
Sure. So of the 1.6 gigawatts, in the H1 of this financial year, we did about 270 megawatts of supplies as a company. Whereas commissioning in terms of new capacity addition in the H1 was a little less than 500 megawatts. So that's about 1/3 of the capacity on the wind side that the country added in the first half. So far as the 1.6 gigawatt is concerned, the delivery schedule right now is, over the next, I would say, spread out or close to about 6 to 7 quarters. There could be, as I said, supply is the easy part. There are certain challenges that exist on the ground, but those are getting ironed out. Those may cause a few delays of few weeks here and there. But I don't think, that makes any significant difference from the project visibility. In terms of timelines, depends on the project size. Sort of a mid-scale project size could take anywhere between 18 to 24 months to execute, right, from, contract signing up to commissioning. But that depends on the size of the project and the site conditions and the readiness of the power evacuation.
Okay. All right, got that. Girish, I wanted your thoughts on the divestment plans. The last time you had told us that, or your company had told us, that you've identified a few non-core assets for divestment. Just trying to understand, A, what is the kind of timeline that you're looking at for this divestment process, and what's the quantum of non-core assets that you're looking to sell?
Yeah. So, yes, we had identified a couple of non-core assets about a year back, when the balance sheet had a certain leverage on the books. Given the turnaround that we've seen financially and a robust cash position, we will be very selective on divesting the non-core assets. One of which,
give
of
us
course,
the number, the amount that you're looking to divest?
So difficult for me to give you a number, but clearly, from any real estate that we have on the books, we are quite focused on monetizing those. And of course, one of our subsidiaries, we continue to keep that under our belt for a certain time because given the visibility that we are seeing in the industry and the turnaround, it becomes a core asset, and there is no compulsion from a financial perspective for the company to look at divesting those currently.
Okay. All right. Final question before I let you all go. Last time around when we quizzed you all said the company is not on the block. So that was good clarity that we got in. And now you are making moves in the right direction, whether it's with regard to reducing debt, whether it's with regard to the ramping up of the order book, or even de-pledging all the holding. But the promoter holding is only around 14%. Is there any plan that the promoter wants to take a bigger chunk in the company? Point number one. And what about Mr. Dilip Shanghi's stake out there? What's the latest on that front?
Yeah, so I think, the Sanghi family continues to remain one of the key and important shareholders of the company. And I think, as we have seen in the statement released by Mr. Dilip Sanghi or himself, in terms of the outlook for the industry as well as the company, they continue to remain a good support to the company in the growth from here. So I think business is as usual, nothing has changed otherwise, and we continue to kind of work as a partner to grow the enterprise. So that's on track. As far as promoter holding is concerned, I think, we kind of continue to endeavor to make sure that whatever possible we can do in that space, the efforts are always there to see what we can do in that space. But no immediate plans of any change in holding structure at this point in time.
All right, Girish, great to have you with us here, and come back again. Thank you for your time. Himanshu, it's always great to speak with you. Appreciate you joining in here on CNBC-TV18. Thanks very much. So, done very, very well. 50,000 crores, by the way, in market capitalization, Suzlon, after the spectacular 2023 it's had. We'll take a very quick commercial break here. Up next, we get you excerpts of our conversation with a management you rarely ever see on television. GIC RE, the reinsurers, is what we're talking about. So growth outlooks there. Stock, by the way, has done very, very well recently. So that coming up. We also will have the management of SBFC Finance. Mr. Asim Dhru of SBFC Finance will join in to talk about the business outlook going forward. Stock actually post-listing has come off a little bit, so we'll talk about that as well coming up.
Welcome back. Well, the markets have flattened out a little bit from holding well in the green. But as promised, let's focus on the insurance sector. GIC RE, that's a stock on our radar. Remember, it's rallied close to around 50% in 15 days. My colleague Yash Jain caught up with Mr. Narayan, the chairman and managing director of the company, to decode what has changed in the business and what's the outlook as well, and which segments could be the growth drivers. Let's listen in to what he had to say.
We did have a kind of interaction with some analysts, some investors in the last month. to see what kind of appetite is there for our stock. And we realized that our company is slowly getting recognized, people are slowly understanding our business, and maybe that is bringing the up rating on the stock. We have performed well last year. We ended up doing extremely well on the numbers. Plus we got our credit rating upgrade from AM Best, which was very gratifying because this helps us in getting good quality international business.
Government absolutely holds about 85%. They have to dilute about 10% to reach that minimum public shareholding. What is your thought? When does that happen in terms of communication with the government? And as you say, investors, understanding the stock, taking interest in the stock, does that become a compelling reason that sooner than later we'll have an OFS coming into the market?
Well, I think an OFS has to happen. Like you said, government needs to ensure that there is a 25% shareholding in the hands of the retail public. So currently we are at 85 as far as the government is concerned. They need to bring it down by 10%. When that will happen is a call I guess the government will take, depending on whether there is enough investor appetite for our stock and whether the prices justify that.
For the next 2 to 3 years, if the street has to look out for an outlining target in terms of business, what would that be?
We would typically grow maybe 10% year on year. Okay. Again, another big factor would be our, the credit rating that we have, which allows us to look at better international businesses. As our credit rating improves, I think we would look for better international business to write. That is where the growth would happen. India as a market, if you see, the insurance market typically grows year on at 15 to 20%, which is amazing. And the regulator has also been pushing to ensure that penetration levels in the market go up. So, just by being in India, our top line will definitely grow.
I want to understand from you, what growth in net earned premium do you expect for the second half of this year? And then from FY25 onwards, where does this number stabilize?
So yes, what would happen is maybe for the next half year, we would expect a growth of 5%. The reasoning is very simple. As we start the growth process in the company, it will typically take about 18 to 24 months for those results to show in our book. Because being a reinsurance company, we sit that much behind an insurance company, and whatever we do, it comes later in our books. Secondly, a lot of our business gets decided during the treaty renewal dates. So for the international markets, it is normally 1st of Jan, and for Indian market, it is 1st of April. So normally what gets decided there, it comes into our books in about 18 to 24 months. So basically those growth that we are talking about based on the capital that we have will start happening from FY25 on.
In FY24, what kind of increase do you see in your investment income over the previous year?
So basically we have two different kinds of income. One is, if you see from my entire investment book, about 72% is fixed income, right? Because that is the way most insurance and reinsurance companies do. And on a book value basis, about 17 to 18% of my book is equity. Right? So the business or the interest that comes from the fixed income thing, that kind of remains stable. This year it has been slightly better because the market has been improving. Now what really changes is the earnings that we get from the equity side. So that depends on how we look at the market, whether we feel that the market has gone up to a certain level for us to sell and book those profits. Again, it could depend on certain sectors which have suddenly run up, and we feel that there is an opportunity to sell at this stage and buy at a later stage. So those decisions will take depending on how the market performs in the coming say 3 or 4 months. But more or less our investment we try to maintain as risk-free as possible.
Correct.
Because whatever risks we need, we already take it on our business. So our investment book is normally kept very, very safe. The investment income this year, the growth would be about anywhere between 7 to 8% as I see it.
Which business segments do you think were the main culprits which sort of brought majority of these losses, and what's the strategy as far as finding or improving those loss ratios are concerned in these large business segments?
Right. So basically for this quarter, what happened was So we had written a piece of business in the US, which was doing both marine and motor. When we wrote it, it was profitable, but over a period of time now, especially post-COVID, we understood that it is not working for us. So that is a business that we are not writing anymore. It is currently in runoff. So what happened was a few losses came in this time. Obviously, there was no premium because we are not writing that business anymore. The losses came in, which is where the loss ratios have gone up. Secondly, what we have done is in the Indian business, you would realize that in the month of October, there was a catastrophic event in the state of Sikkim.
Correct.
Right? And even though it happened in October, and what we have done is basically closed our accounts up to September. As a matter of utmost prudence, we have actually provided for it.
The IBNR claims.
The IBNR claims, because there have been no results which have come in from there, and nobody has given any kind of estimates. But purely as a matter of utmost prudence, we have added IBNR close to 650 crores, which has again added possibly about 4 to 5% on our underwriting, on our combined ratios.
Where do you see the combined ratio at the end of the second half? And speaking about the target that you had set out, that we'll get to the number of 100 as soon as possible.
True.
As we stand today, how soon do you see yourself reaching at that 100 number?
So one is for the current year, we hope to be where we were last year, which is close to 109.
Okay.
I think hopefully we should reach that. Second is on the magic number of 100 to reach that. See, the point is it is not something which is going to be attainable quickly over a period of year or two. Simply because you have to understand the market. GIC writes 70% in the Indian market, and the Indian market, the insurance market, runs at a combined of 120. So when they are running at 120 and I am writing a major portion from this market,
correct,
it will be difficult for me to do that.
So about 109 in FY24. FY25, where do you see it going? What is the path that you expect?
We are looking at improvement. We are looking at improvement. So it will happen that maybe year on year we will slowly improve by a percentage each.
Okay, well, things are happening. GIC-RE, the stock is up about 6%. So the surge continues. So almost 60% in the last 16 odd trading sessions. But the other one is Tata Technologies, which is sort of blowing out the lights, literally. The rate will come up on your screen, and we'll have a sense of where that is finding its footing in terms of okay, it's settling at 1,200 rupees per share versus the issue price of 500 rupees. I mean, I thought that the listing would be in the vicinity of 900, 1,000. This is 1,200. So incredible demand, which could not be satisfied during the IPO, coming through the secondary market as it makes its debut, in the secondary screen. So we'll have more on this one as we go along, but that's the spectacular listing and will count right up there in terms of the best listings of this year. Well, we'll come back to Tata Tech in greater detail in just a bit from now, but we also have a very interesting company and a very interesting person to talk to next. We're talking about the financial services space, and we are speaking with Mr. Asim Dhru. We have he's of course the chief at SBFC Finance. Mr. Dhru, great to have you with us here. Good morning. Prashant this side. It's been a while since we spoke. I think it was on listing day, and after that, not very much by way of interaction. So this is good. I want to just start by asking you what is on everyone's mind, which is the unsecured lending bit, which the RBI sort of asked financial institutions to raise their risk weights for, and of course the exposure to in that particular segment. So just wanted to get that out of the way. What is your exposure, if any, sir, in that unsecured segment? So let's begin there. Go on.
So we ourselves are a secured lender, and we only lend against the security of property and gold. So the circular directly doesn't affect us in any way. However, when the risk weight has been increased on bank lending to NBFCs, that cost increase will get passed on to us as well.
Portfolio LAP, sir, for you? Loans against property? I mean, which you said?
Yes, it is loans against property and gold loans.
So indirectly you will have an impact, right? So have you been able to, what percentage of the portfolio is LAP?
No, so basically LAP is not impacted by that because we are MSME lenders. We are not into consumer lending. Only about 10-15% of our business is lending to consumers in the sense of lending to individuals. That part could have an extra risk weight. We are still awaiting clarifications, but there could be an extra risk weight in that part.
Okay, so relatively lower impact on that front. Hi, Mrs. Dhruv. Good morning, Nigel on this side. Well, tell us on the cost of funding, though. As you mentioned, RBI is tightening the screws out there for banks lending to NBFCs. So how much does your cost of funds go up by?
So the jury is still out there, but my sense is that a 25 basis point risk increase will translate into a 15 to 20 basis point cost increase. So that will eventually come. It will come with the new lending initially, and then the stock will take a little while to price out. But going 1 year forward, the price has been moved up by somewhere between 15 to 20 basis points.
And how much of your borrowing comes in from banks?
Majority of our borrowing is from banks. We are not very active into the NCD markets. So co-origination and bank borrowings are the two sources of borrowings for us. So majority of our borrowings is from banks.
Okay, majority of the borrowings from banks. The SME disbursement growth was very strong for you, in excess of 25% year on year. What kind of overall disbursement growth are you looking at by the end of the year?
So we came on for a very small base, so the percentages look very high. But I think that on a sustainable basis, a 5-7% quarter-on-quarter growth looks a little more sustainable for the near forthcoming future.
5-7%, that's for SME disbursements.
Yes, that's the quarter-on-quarter growth on the AUMs is what I'm looking.
Okay, quarter-on-quarter growth on AUMs. But your average ticket size, is there scope to increase that further as well? I mean, it's grown about 3.2% quarter-on-quarter. I mean, there has been a growth. I don't know the year-on-year numbers, but quarter-on-quarter, the average ticket size has gone up. Is there scope to increase it further?
No, every ticket size will remain around ₹1 million, plus minus, a little bit here, a little bit there goes. But largely, it will remain around ₹1 million. That's the segment that we are targeting. And that's where we are getting our best, RAROC, returns. So we will keep the average ticket sizes around the ₹1 million that we are. Increasing the ticket size takes us into a different segment of lending where we have a risk of adverse selection, with banks playing in that segment.
So is your focus more on customer acquisition now, or are you also planning to increase your presence geographically?
We are in 16 states, and at the moment, we have covered 25% districts in these 16 states. We will go deeper in these 16 states over time. So eventually, we'll get into 60-70% districts in these 16 states. We are not going to go beyond the 16 states as of now, but we will go deeper. We'll penetrate deeper in terms of geography. So we operate generally on a hub and spoke model where we have hubs, and from the hubs we reach out to. So we are in 171 branches. From these 171 branches, we reach out to about 250 odd locations. As the locations mature, they become hubs, and then we open spokes from there. So it's a slow model. We generally open about 20-25 branches a year and intend to be at around these levels.
Asim, how's competition? I mean, one of the USPs when the IPO also came, I remember speaking with analysts, etc., was that you operate in, the formal self-employed segment where there was not that much. I mean, so it was a bit of a niche. Or is competition picking up? I mean, when one talks to NBFCs, it looks like everyone wants to do everything. There were sector champions earlier, which is they still are, but it's now big. Everyone is getting, into pretty much all segments.
Yeah, financial sector is a funny business in two ways. One is that there is no brand that anyone really has. Unlike what happens in a soap or a shampoo, people don't reach out for a particular brand. When they go out for a loan, they want the cheapest loan possible. So one is that it has very low entry barriers, and therefore everybody ends up doing everything eventually. And in the end, there are only two forms of loan, secured and unsecured. And there are only two forms of borrowers, individuals and businesses. Now, within that, you can cut it one way, you can cut it the other way. But essentially, what we have seen about this business is that while everybody does the same thing, they don't get the same result. So the only real moat in this business is execution and what you do within execution. So competition in this segment has always been there. There are 8,000 NBFCs, there are 400 odd banks, regional rural banks, small finance banks. There are cooperative societies. So competition, there is an informal segment as well. So competition in the segment has always been there. But the larger trend is that the market is migrating from the unorganized format of finance to organized finance. So there's a huge shift that is happening down there. And that is a wave that we are trying to catch. So the competition in this segment, will be there, will increase, new players will come, some existing players will exit. This drama will continue. But if you execute well, there is enough for everyone.
Okay, all right. Mr. Drew, since you said the cost of borrowing could go up a little bit, taking that into account, what do your NIMs look like? Is holding above 9% now. You want to give us a broad range. And given that you're looking at your AUM growing by 5 to 7% on a quarter-to-quarter basis, by the end of FY25, AUM should be around 8,000 crores, $1 billion approximately?
So we are fully floating in terms of rates. 92% of our portfolio is floating rates, and it is marked to our cost of funds. So as the cost of fund increases, we pass on the cost of funds, and our spread remains constant. So we would not be directly affected by any increase or decrease in cost of funds. Our model needs the spreads of 7% and NIMs of 9%, and that will more or less remain where they are. No change there. We don't give forward guidances on growth, but at the moment where we are, a 5-7% quarter-on-quarter growth number looks very, very achievable.
Okay. One final question on asset quality. You briefly mentioned it earlier, but just wanted the numbers. This time your asset quality has improved. Where do you think you can end the year with in terms of gross NPAs?
So we would be around these levels. We don't see any material change from these levels. We would be around these levels. And broadly, we are operating on a thesis where our cost of credit would be about 80 basis points to 100 basis points in different market cycles. At the moment, it is just under 80 basis points. So broadly, we think that there will be cycles, and the MSME is a difficult segment to deal with. And one of the reasons why there are a lot less competition in this segment is that it's a lot harder to execute in this segment. We think that we are still 6 years old. We still have many more cycles to go to before we stabilize. And we think that if we are able to hold the credit cost to these levels, we would be pretty happy with it.
All right, Mr. Dhruv, we'll leave it there. And execution is what people are sort of excited about with you at the helm. Thank you for joining us with that perspective on SBFC Small Business Finance. Markets, by the way, taken a dive. So the Nifty intraday will tell you that story. Very sharp cut. And this started, by the way, at about 9:50 or so. So this is the last 10 minutes I'm talking about. There you go. That's what I'm talking about. 50 points. Actually, almost all of the 50-point cut has come in the last 10 minutes, not even 10 minutes of trade. And maybe we can look at the Nifty Bank as well, where I think the dive has come through. The high in the Bank Nifty was made at about, right after open, at about 9:24, but the waterfall decline has started, at about 9:44 or so. So sharp cut coming through.
The three big listings up for you on the screen, and Tata Technologies, that's the one that's listed at 140% premium at around 1,200 rupees a share. The IPO is priced at around 500 rupees. Most were working with a 900 to maybe 1,000 rupees odd. It's even better than that. And prior to listing, you were saying that it's trading at around 28 times its forward earnings. On listing, well, now it's equaled up things. It's trading at around 66, 67 times. It's a blockbuster listing, but Sonia, a couple of others as well.
I think I can't take my eye off the Tata Technologies listing, right? So just want to make one mention on that. I think now it's almost at 1,400, 1,369 on Tata Technologies. If we can just pull up the, the price, the exact price, 1,370, 1,380 now on Tata Technologies. Big bang, stellar debut coming in. There you have it. Just look at that, almost at 1,400 rupees. Big one. I mean, of course, we saw the kind of subscriptions, but let's not forget, this is the first listing from the Tata Group in 19 years. The last one was TCS in 2004. I didn't get a chance to, be there for that listing, but this is a big one in a growing space, and
the one who was there is about three of us is here.
I own TCS IPO shares.
Oh wow!
Full disclosure.
Okay.
So that's. But this is spectacular. I mean, that was nothing like this.
So you got allotment that time, but not this time.
But very, very few. But this is, the one thing is that this was also a very small issue.
Yeah.
I think they raised 3,000 odd crores. So that also makes a lot of difference. I mean, it's a small issue. It's a Tata Group. It's the right space. It's got everything going for it in that sense. And it was reasonably priced. Although, to be fair, when we say it was reasonably priced, if you look at growth, it's nothing close to Tata Elxsi or KPIT. I mean, growth rates are not really hot. I mean, they're about 15-16% growth rates. Margins are about 60. I guess the company and the bankers recognize that and price. But they've got bumper results on the back of it. So 1358 on Tata Technologies coming through.
And also Gandhar Oil, I think if you just look at that, just need to mention, because that's the other IPO listed with 75% premium, I think. So that one as well has done pretty well. I think the ticker was giving us the correct rate, so that should come up for you. And guys, just one point, we were talking about the valuation comfort. At 500 times, it's around 28 times. At around 1,400 rupees, it's close to around 79 times. So that valuation comfort
is
now,
gone.
Now it's like squeezed out. I wouldn't use words. It's like gone.
It's squeezed out compared to even its peers, right? KPIT is trading at 80 times.
And that's trailing.
That's trailing. Yeah.
So so on a forward basis,
it's at par now.
It's pretty much at par. So let's see where it goes. But I think it briefly went to around 1,400 rupees and it's cooled off a little bit from the top. Fed Bank Fina, in fact, will be feeling a little lonely because that's the only one that's at a discount of 2%.
There's a saying, right? Whatever is worth doing, it's worth overdoing.
Yeah.
So I think that is what is.
I think your definition of IPO holds now. Overvalued.
No, I don't think.
I mean, jokes. Jokes apart.
Yeah, but I made that point only to say I was exaggerating a point to make the point that this was one of the more reasonably priced issuances.
Yeah.
Usually it is. As Nigel was also pointing out, I mean, we've seen so many over the last year and a half, little by way of profitability, sector which perhaps could see disruption, small base, and ridiculously priced. This was not one of them, and I think they've got the response, a big thumbs up from investors.
I just want to make one mention. This ER&D space is really picking up in a big way, not just in the auto space, right? Even in aerospace. I mean, that's a big vertical for them. And they are deeply involved with Airbus, with Air India for, the aircraft conversions, reducing the development time, etc. So both the spaces, hot spaces right now, autos, EV conversion, as well as aerospace, in which Tata Tech is present.
I spoke with the CEO before the IPO, and what I liked about it was Warren Harris, who was the CEO of the company. He actually was very reserved. He was not going gangbusters, throwing out numbers, I'm going to do this, we're going to do that. I pressed him about margins, for example. Will margins see a big improvement?
Yeah.
He actually pushed back. He said, there's no quantum leap in margin improvement. It's going to be very incremental. Those are exactly his words. So, conservative and kind of, but of course, positive about prospects. It's a large market. $100 billion is the overall R&D market. And I think about, $25-30 billion is the segment that they operate in. So 1357 on Tata Tech with a few minutes behind. And that is very, very strong. Mitesh is with us to run us through what he's making of things and the sell-off that we are seeing. So 65 points now. So we've got a market to address as well. The Nifty Bank is down about 0.5%. Mitesh, this is a bit of a fear of heights or what?
Morning, Prashant. It looks like that. And I did mention that, we have a falling gap on the Nifty, which was made on the 28th of September. And the filling of the gap would happen at about 20,115. And we got a high of 2136. So we just filled the gap. And I think some profit booking is happening. I would not really worry about the fact that the market is down from the day's high. I think you will see good support coming around levels of 19,950, 20,000 zone. And we are only about 50-60 points away from that. So I think we would again attempt a long trade on the index. Having said that, the trading calls which I have are both from the insurance sector. ICICI Pru is breaking out nicely. So that's a buy with a stop just below day's low of 552. Look for targets of 580 here. And ICICI GI, that's ICICI General Insurance. That's a buy with a stop below levels of 1435 for targets of around 1520.
Okay. Mitesh, stay with us because I want to address a few other stocks with you. Thanks for that, by the way. We'll take a quick commercial break here. Mitesh is, of course, with us, and we shine the spotlight on more stocks with our research team. Stay with us.
All right, welcome back. It was a blockbuster debut by Tata Technology. So let's get that chart back up. Debuted at 140% premium to its issue price and still standing tall. Remember, it's the first listing in the last almost in 2 decades from the Tata Group, and Tata Technologies at 1330 now. Mitesh Thakkar is still with us. Mitesh, for the market, there is some sell-off that's come through. The Nifty Bank has actually given up on its gains. What do you do for the rest of the day?
See, as I said, I think, we kind of hit the gap, and the Nifty Bank also hit an important level of 44,800, not actually just 40 points below that. But I think both the indices are giving a pullback, which I would want to buy into. Now, the levels to look at on the Nifty would be closer to about 19,960-70 zones. And on the Bank Nifty, it will be slightly deeper, I think around 44,175, 44,200 levels. These are spot levels I'm talking about. So I think a bit more of decline, and maybe you would want to take some long trades on the indices.
Okay, got that. Mitesh, thank you for joining in, and great speaking with you. We'll take a quick commercial break here. The market's down 50 points, very different from how we started the day about an hour ago. The economy will pick up on all the action. My colleague Latha will get chatting after a break with DK Joshi of CRISIL and Upasana Bharadwaj of Kotak Bank to talk about their expectations from the GDP data later today. Stay tuned.